What's going on, traders? In this video, we're going to talk about growing a small account into a sizable account. So I've been trading for about 7 years now, and I have blown multiple accounts plenty of times. I'm talking about probably over 20, 30 times, you know what I mean? So I definitely want to just share this. This is definitely a little bit more sentimental for me because I was once in your shoes before, trading on small accounts, trying to figure out what broker is the best, which one has the best spreads, all the good stuff, right? I tried every single strategy, and it wasn't until I figured out that my mindset was number one, not in the right place, because I was trying to make money for other reasons than just enjoying the passion, right? Enjoying the actual trade. I was trading to pay my bills because I was struggling. I was trying to get my cell phone bill paid off, or rent, or just make some extra money to pay my car note, right? And I was struggling, so I wasn't really focused, and I was just trading to trade, right? So really important, don't trade to trade, don't trade to pay a bill off, right? Because it's going to give you a little bit more urgency, and you're going to force yourself to get into unnecessary trades. But yeah, another thing was I was actually trying to mix and mingle strategies as well. So, I did a lot of, back testing, and, I would add this indicator, I would add that indicator, I would watch Q Banks and just all these other influencer traders. And I'm like, okay, I like this, but I'm going to take that and put it into this strategy. And then I'm going to take this and, make my own strategy, right? And what I realized was my chart was just all over the place. It was just, Fibonacci's and all types of EMAs and MACDs and just crazy stuff. And so another thing that I realized was slimming everything down and keeping it simple actually helped me out. And then number three, a long time ago, when there wasn't really any lot size calculators and position size calculators, I would just trade one lot, or I would trade based off of lots. I wouldn't even trade based off of my account size, and I wouldn't risk a percentage base, right? I would say, hey, I'm going to do a 0.5. I'm going to do a one lot. I'm going to risk two lots on this account, or on this position, and it's just backwards, right? So I feel like, in the beginning, when, day trading started picking up, especially in 2020, when everything was shut down, a lot of people were using MT4, MT5, and, it's really easy to understand, one lot, right? $10 per pip, you move 10 pips, you make $100, whatever. But what I realized is, you're not really in the aspect of mitigating risk. And that is the entire game of trading. It's mitigating risk and finding high probability setups, right? Risk reward. So yeah, I just wanted to share that. I wanted to get that off of my chest, and let's just get straight into it. You know what I'm saying? I don't want to waste your time. If you're new to my channel, go ahead and subscribe. My name is Nate. You can find me at all of my social media handles at Unlock with Nate. But let's get started. So the first thing you need is TradeLocker or MT5. I'm going to show you my strategy on TradeLocker. I think it's a lot more modern. They have the position size calculator already integrated. And the broker that I use is GatesFX. Really good execution. Spreads are just amazing, and it takes 5 minutes to get started. Plus you get 1,000 leverage. They're actually doing a 100% deposit bonus. So if you deposit $100, they're gonna match that, and your trading account's gonna be $200 on a live account, right? So if you deposit 1,000, they're gonna match that with $1,000. So yeah, if you want some, basically some free money, use my link. And I'm not sure when they're gonna end the promotion, so just take advantage of it. I'm just giving you a heads up right now. It's July 12th, and in 2 days, that's when they're gonna actually do that bonus. All right, let's get into it. So I have USD JPY on my chart, and what we're gonna do first is we're gonna do the daily time frame. So I'm on the daily time frame right now, and I'm gonna go and to the line chart. So right here, you're gonna see price is currently right here. The market's closed, so I'm actually showing you guys on my day off. So right here, you're gonna see basically I look for 3 confirmations. So on the line chart, especially on the daily, there's gonna be a lot of ambiguity. So I like to use the line chart just to see a little bit more clearly. And it just helps me find areas of interest where price is kind of hanging out at. So we can see clearly right here that, there's been multiple touch points, comes down, bounces, comes down to this area, bounces, breaks, starts respecting the area as resistance. And then again, we're coming to that area of interest where it might possibly bounce off of that resistance. So I like to create a channel between current price. So what I mean is, if you think of train tracks, you need to find something that's in between current price and yeah. So right here, let me actually train tracks, train cakes, what the heck, tracks. So channel, right? So let me just move this over really quick, make it a little bit smaller. Let's go to 20. Perfect. Now that I have a good amount of room to play, I'm gonna do one more area or one more level above where current price is, right? So the next level of interest would be around here because price kind of likes hanging around this time. So again, 3 confirmations. We have 1, 2, and 3. And then now that I have an overall idea of what price is doing on the daily time frame, I can zoom out and go to my 4-hour. So let's go to candles, and now look at it. It looks pretty clean. Doesn't need to be perfect because we're not fortune tellers, but we understand that price likes to hang out in these areas. So now I can find high probability setups and eventually get into a trade when it's live. So now that I have that, I want to look for any sort of trends that are happening on the 4-hour. You can do it on the daily, but I just prefer the 4-hour because there's a lot more information happening. So I don't really see too many trends. I mean, I see something around here, but it's a little ambiguous. And then price right here is kind of consolidating. It's definitely consolidating, right? And so, yeah, really no significant trends. There was a trend over here in the past. So we have this right here, right? So lower lows and lower highs forming. Then we saw basically a price coming up to this area, and then it breaks that big level. So price is kind of at a crossroads, right? It's just consolidating, and so we need to actually get ready for a big break to the upside, or price continuing to actually consolidate. So we're in a good spot now because we are in a high probability area. So after I identify or don't identify any trends, I'm gonna zoom in on the 1-hour and look for more details. So I don't like trading within a channel. So both of these areas would be no trade zones, right? So think of a train track. If price is in the middle of a train track, I don't want to trade. But if price is near a level, right? So near a level of resistance or near a level of support, then I want to get ready to basically spot an opportunity, right? So I can do one of two things. I can go in immediately for a short right here, okay, which is the most simple setup. So I'm gonna just show you guys. Price is gonna come up to this area, most likely. I'm gonna put my stop loss above this last high, and then I'm gonna actually put my target to that level. So this is a 6R multiple. So if I risk $100, I'm gonna make $600, right? But we don't know if price is actually gonna come down, right? It can just blast through this level of resistance, break, retest, and then do that, or it could just break up to the upside, maybe do a small retest in the middle of the channel, right? So we just don't know. But this is where calculating your probabilities is going to come in handy. So a 1 to 6 risk reward ratio, right? Risking $100. This is just an example, but risking $100 to make 600 is a very high probability trade. Sorry guys. But if price comes up to this area and then retests, right? And I do a long position, okay? And I put my stop loss maybe like below this low right here, okay? And then I put my target up here. Now I can see that this risk reward ratio setup is, oops, let me go back, is a 1 to 3, almost a 3. So in your opinion, what trade are you going to get into? I'm gonna get into the 1 to 6, obviously, because it's a better setup. So that is basically step 1 of the strategy. It's basically price action, but there's added layers. So let's continue to add on to these layers. So let's get rid of these drawings, and I'm gonna actually show you the indicators that I use. It's really simple, guys. Like, I don't want you guys to overcomplicate. So double click on moving average exponential. You can just type in EMA in indicators right here. And then once you have that set up, just go to your little hamburger thing, hit settings, and then I'm gonna type in 20 because I used the 20 EMA. I'm gonna mark it orange, make it a little bit thicker, and then hit OK. Now let's do it again for the 9. And I'm gonna make the 50 EMA red. So let's change that to 50 and then make it a little bit thicker so I can actually see. And then I'm gonna hit OK. Perfect. So now that we have even more information, I'm gonna use the EMAs for another confirmation. So if you're not familiar with a confirmation basically is like another puzzle piece to the puzzle, right? You're trying to solve a puzzle. You're trying to solve something. And what that is you're trying to gain more evidence to get more confidence on your educated guess on what the market is going to do. So every time the 20 and the 50 EMA cross, right, that's going to be a confirmation for price to be bullish or bearish. So right here you can see, right, the orange was basically above, crossed over, and then it crossed back up, right? So this cross right here is basically a bullish confirmation because one, we see that a green candle printed, super bullish, and it's respecting and staying within the bounds of the EMAs, right? So right here, we see price coming up, retesting, and then continuation up, right? So this is a confirmation that price is still bullish because it's respecting the 20 EMA. So let me show you another example. Right here. Okay, right here. So right here, price crossed, and then a lot of bearish candlesticks started printing. So this wouldn't be bullish, right? This would be bearish because it's not only crossed the 20 and 50 EMA, but the candlesticks are underneath the 20 and the 50 EMA. So I wouldn't be bullish on this at all, and I wouldn't look for any sort of reversals because it's respecting not only price, but it's also respecting the EMAs. Okay, hopefully that made sense, guys. Let's continue moving. So I need to basically zoom back out and get another confirmation, right? Because if the 20 EMA is above price on the higher time frame, right? So right here, 1 hour price was below, 4 hour price is also below. And then let's go and zoom out to the daily, right? We see that there is a significant cross right here. So the 20 and 50 EMA cross, and we see that price is above as well. So that is another confirmation. You want to have multiple time frames aligned to basically confirm that you are in a bullish trend, right? So if the 4 hour was below the EMAs, right, then there's going to be some dissonance. So basically it's not aligned. So you want to make sure that the daily is aligned, the 4 hour is aligned, right? So you see the candlesticks are above the 20 EMA, and then the 1 hour again. So I am definitely bullish on this, but because we are at that resistance, we're gonna probably start seeing price slow down. So price can potentially come up to this area right here, or the previous high, and then start consolidating. So we're just in a waiting game right now. But anybody who is, you know, trying to trade price action, right, use the 20 and the 50 EMA, and use multi-time frame analysis to confirm that price is in a specific trend or heading in one direction, right? And the best way to understand what price is doing is basing it off the daily, the 4 hour, and the 1 hour. So that's what I do, and it's been working great. Perfect. So another scenario is a break-in retest, right? So we see that the daily time frame is right here. You can see the 20 and the 50 EMA. We see the 20 crossing above the 50, which is a big bullish sign. So if price does break significantly above this previous high on the candlesticks, I'm not gonna get into a buy, because most of the time when there's a significant break, there's gonna be a significant retest. So I'm gonna wait and just chill out until price comes back down to this area, and then I'm gonna get into a buy right around here, right? So if I scale down to the 4 hour time frame, okay, it could take me a day, it can take me 2 days. I'm not gonna rush, I'm not gonna get FOMO. And if price comes all the way to the middle of this channel, right, a lot of people may get FOMO. You know, they might get that little fear of missing out because they know price is gonna hit this target right here. But looking back in history, I typically see when there's a big significant break to the upside or downside, price has to come back down to level back out, right? So what comes up must come down. Basically, it's really simple. And yeah, so that is another play that I can get into, right? But because we want to think in probabilities, we want to get into the 1 to 6 risk reward ratio, which is this one right here, okay? So put my stop loss above, put it below, and then I have a 1 to 6. So I want to break down some math for you, because you know, a lot of traders, including myself, you know, we want to be right all the time, right? And it sucks losing a trade, but you only need to be right 40% of the time, right? So that means if you take 10 trades and you lose 6 of them, right? And let's just put a real number on it. Let's say you risk $100 on all 10 trades and you lose 6. That means you lose $600, because negative 100 times 6 is negative 600. But you win 4 trades, and each of those 4 trades is a 1 to 3 risk reward ratio. That is 4 times 3, right? So 4 times 300 is 1200, minus the losers, minus 600. I'm still in profit $600. So do not worry about being right 70% of the time, 80% of the time, or even 60% of the time, right? You only need a 40% win ratio if you have your risk reward setups in a minimum of 1 to 3 risk reward. So I can afford to lose more trades than I take and still be a very profitable trader. Again, if you guys if it's not clicking for you, rewind it and maybe like slow it down so it clicks. But this is really, really important because trading is just probabilities. Strategy is definitely important, but you need to actually understand risk reward and high probability setups, okay? The last thing that I want to show you is candlesticks. So I don't use a ton of confirmations for candlesticks. I just typically look for bullish engulfings or bearish engulfings. So I'm going to show you an example right here, right? If all this stuff right here didn't exist and price was right around here, okay, I see a really good setup. What I see is price near the support, and then we see price breaking above that support. We see a beautiful retest, a little bit of consolidation before the continuation, but right here you can see 2 confirmations on that support. I see a huge bullish engulfing, okay? And if you guys aren't familiar with a bullish engulfing, it just means that you have a bearish candle. So let's make this green, or I mean red. And then you have a green candle that engulfs the entire previous candle, right? So it can swallow the previous candle, right? It's engulfing it, right? Pause. So that is one confirmation. The other confirmation is right here. You can see that the yellow and the red are crossing. So that is a significant confirmation as well. So I have 3 confirmations just looking at this right here. I see the break and retest, that's 1. I see the bullish engulfing, candle closes up here, that's 2. And then I also see the yellow and the red crossing, that's 3, right? So I just need one more confirmation, right? I do see price hanging above the 20 and the 50 EMA, right? On the 1 hour, okay, right here. I see it hanging above on the 2 hour, and then hopefully above on the 3 hour, right? So right here, it's a little ambiguous because obviously we're on a higher time frame. So let's get rid of these drawings. But basically price closed around right here when I saw that that big bullish engulfing candle. So let's look at it really quick. Oh yeah, right here. So this candle right here that closed, we zoom out, right? We can see that price is kind of starting to hang in the middle of the 20 and the 50. So I would call this a good confirmation because on all time frames, they are aligned. We see the break and retest. We see price respecting the support. So I'm gonna get into that trade, right? So this setup would have been, let's see. I would have put my stop loss. Let's zoom in on the 1 hour really quick. Slide this over. And if you guys are brand new and I'm like going way too quick, hop into my free channel on Instagram. So I have a channel basically. It's very similar to like a Telegram or Discord. Just follow me at Unlock with Nate. You're gonna see Day Trading Inner Circle. You tap on it and then you just join the group. So this candle right here, once it closes, I would have got into a buy. So I'm gonna put my entry right here. And then I'm gonna go to the last low. So my stop loss would have been maybe right here, just to give it some breathing room. So these two lows right here, this wick and then this wick, I would have actually set as a stop loss. So I'm gonna just drag it a little bit lower just to be safe. And then right here, I would put my target like right around here. So this is a 1 to 3.58 risk reward ratio. So I'm risking $100 to make $358. It's a perfect setup. But yeah, guys, so basically, let me just recap. Multi-time frame analysis. I start off on the daily, 4 hour, 1 hour, and I look for simple price action areas, right? My horizontals, right? I look for support, resistance. I do the same thing for the 4 hour, but I also look for trends as well. Not really super important to find the trends, but if you do find one, go ahead and line that trend up. And then on the 1 hour, I'm just looking for more specific patterns, right? So do I see a bullish engulfing? Do I see a bearish engulfing, right? Am I seeing exhaustion happening near the resistance area? Am I seeing exhaustion at the support area, right? And what is price doing? Is it hanging out, or is it like super bullish and super volatile? And then another thing, right? If price is basically crossing below a specific EMA, like the 20 and the 50, right? Then that's a significant sign for me to pay attention to a reversal, right? So I am looking at charts from basically a sky view, and then I zoom in onto the 21st floor or whatever, and then the 1 hour is kind of like a street view. Once I start getting into the 15-minute, and we can talk about that in another video, you can reach out to me at my Instagram. Then I'm looking at it from like a telescope, and I'm looking at patterns even more. But that's it, guys. Like, I don't want you guys to overcomplicate it. If you guys do need a broker, I would highly recommend GatesFX. You get you get 1,000 leverage and you're off to the races. So good luck. If you have questions, comment on this video, reach out to me on Instagram. I'm like literally a message away. I'm going to reply to you, so take advantage. That's all I got, guys.